Welcome back to Viper Trades, and this is the next episode of the educational series. Today, I'm going to be going over timeframes and why timeframes are very important when making investments or when making trades. So the thing about timeframes is that it ensures that your directional bias is correct, as you don't want to be counter trading a trend or investing in a downtrend, for example. So recently there was one coin strong. It did come into a good point of interest. It tapped into the weekly demand. However, the problem with strong is that it was still in a 3-day downtrend, and there was no sign of buyer interest there. So although it was a good buying level, I did tell people not to buy until we see confirmation that buyers have stepped in and strong is looking to go higher. So that's why it's important just to understand timeframes and to understand why it's important when looking for investments and looking for your trades, to make sure you're trading with the trend and not trying to trade against the trend. So here, if you're looking at the monthly, you go down to the weekly and you look for entries on the 3-day or daily chart. If you're looking at the weekly chart, you narrow it down to the 3-day and daily chart, and you go all the way down to the 12-hour, all the way to the 4-hour. And if you're going to start with a 4-hour, you narrow it down to the hourly, then the 30-minute and 15-minute. And if you start with the hourly, you'll narrow it down to the 15 and 30-minute, then narrow it down to the 10 to 5-minute. So when trading, I mainly use these ones, and yeah, this one I use for my investments, and this one too. So this is for my trading, and if I'm looking for a long-term swing play or investment, I look at these two here. So the perfect example recently is waves. So as you can see here, waves came into a monthly point of interest. As you can see, since then, it's had a very nice reaction, and it has taken off. It has taken off since. So the thing about waves is that people are looking to short. People are looking to short waves at 24 into the monthly supply zone, looking to short at 30. They're looking to short here at 40. And as you can see now, waves went all the way to 60, 63. So anyone shorting that was caught on the wrong side. And this is why it's important to make sure you're looking at the time frames and making sure directional bias is correct. Because if I narrow it down now, so you can see the monthly now, the monthly is bullish. So we can even do something like this and still be bullish, you understand? So let me go down to the weekly now. And look, you can see we've had 1, 2, 3, 4, 5, 6 green weekly candles in a row. So upon these 2 weekly candles, when we got this confirmation here, as you can see, we never lost this level here at $4. So you can see now, this was on a downtrend. This was on a downtrend. So you got, it started here, got 1 down candle, 2 down candles, and from then on, you can see this is where you get your confirmation that waves is bearish, and you'll be looking for your shorts all the way down into this point of interest. So after that, as you can see, now we get confirmation with 2 bullish candles, 2 bullish weekly candles, and that confirms your trend change. And then you'll be looking for longs. You will be looking for longs until we get that weekly confirmation that waves is bearish again. Then we're looking for shorts into around $30. But for now, it's still bullish. And I do feel like as long as it's still bullish, you'd want to continue to look for longs as opposed to shorts. You don't have to try and catch the top and the bottoms in the market. I feel like that's a big misconception. As long as you're playing the right setups and you're trading the trend, you will be good. It doesn't matter if you bought waves at 20, it doesn't matter if you bought here at 9 or 30, you still would have made money. You understand? As you can see, 9 to $20, that's a good 100% plus move. And you got this move here from when we flipped the supply zone. You got that move from 30 to around $60. That's almost on 100% move right there as well. So let's go down to the 3-day. So as you can see again, Waves has been very bullish. As you can see, on the 3-day, it's still maintaining good structure. It's still maintaining good structure there. And the fact that we flipped the supply zone as well, it just adds to the confirmation that waves might want to see higher. So right now, we're not looking to short waves. And we're going to go over market structure soon. We're going to go over it soon, market structure and how to identify a market structure. But the thing with timeframes, if you're looking to invest in a coin and you're looking for a good level to buy into, as I mentioned, you'll use the monthly and the weekly, because look here, as you can see, when waves took off here, it took another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. It took 10 months for it to come down into this monthly point of interest for investors or long-term swing traders to get in. So you can see the reaction here. You can see how much interest there was in this region here, and this took 10 months to come back into. So as an investor, you wouldn't mind waiting 10 months if it meant you're going to get the best deal for your investment. So this is what people have done. They've waited 10 months, prices come into the point of interest, and yeah, they've made nice money from this up move here. However, if you're trading, you're not going to be waiting 10 months for price to come into your level. So you'll go down to something like the 4-hour. I tend to use the 90-minute as well. So you got your 4-hour point of interest here. And the thing is, with timeframes, the higher the time frame, the lower your reward will be. However, your risk will also be lower as well. So if we look here at the 4-hour, you can see on the 4-hour, you would have to take this trade, something like this. As you can see, if you're to trade up to here, this will give you a risk reward of 2.7. However, you can see that you're more likely to be tapped into the trade, first of all, if you trade on the higher time frames, but your risk to reward will be lower and the trade will take longer to play out as well. So if you go on the 90-minute now, you can see you've got your 90-minute point of interest here. But you can see now, if you move it down, your risk to reward basically doubles. So it is around 5.4 right now, if you're to trade it here. So simply speaking, on the 4-hour, if you're to put, let's say, if you're to put $10 in to that trade, you would make $27 back when this trade hits the target. And if you were to refine it to the 90-minute, if you were to put $10 into the trade, you'll make $54. So you make double what you would have made if you were playing off the 4-hour. However, you always want to use time frames based on how much time you have to look at the charts. So if you can't look at the charts all day, you don't want to be using the hourly, the 15-minute, the 5-minute, if you don't have time to look at the charts all day. If you just want to play weekly swings, for example, let's say you have time to check the charts and then you want a trade to run for the rest of the week, you'll be looking at the daily, the 4-hour, for example. And if you just want those multi-day trades, then you look at the 4-hour, the hourly, the 90-minute, for example. And as you can see, this trade took 1, 2, 3, 4, 5, around 7 to 8 hours to play out. So those are the kind of trades you'll be looking at if you have a bit more time to look at your screen. So I tend to use the 90-minute, the hourly, the 30-minute, the 15-minute, because I don't have all the time in the world to set the charts. I use the 4-hour as well. I don't have all the time to set the charts, but I do like the swings that last roughly less than a week. So if that's something that you're looking to do, swing trades, trades that last a couple days, then the 4-hour all the way down to the hourly is a good time frame to use. And as you go lower, as you can see, there's more noise on this 15-minute time frame. So something where like you need to have time to set your charts to use these kind of lower time frames, because as you can see, price can be very, very volatile. I think we need to monitor your trades well as well. You don't want to come back and your trade is in profit and then it goes to a loss. you need to sit at your screen to make sure you know when to take profits, you know what Bitcoin is doing, and yeah, you know when to put your stop loss at buy entry as well, because you don't want to be in a position where you're doing something, you're at work, and the trade is reversed without you and hit your stop loss. You'll keep losing trades that way. That used to be me. I would play a trade on 5 minute, you know, will be up nicely, 2R, 2.5R, fails to hit the 3R target and reverses and hits the stop loss. So that's how I was losing in the beginning. But now I found the time frame, the 90 minute, the hourly, the 4-hour, which is suited to me. And I know this is something I can monitor. So yeah, as for waves, as you can see, even the 8-hour here, as you can see, it's been in a constant uptrend. So I'm just going to simplify this for you guys. You can see here, you can just see it's going something like that. You can see it's just in a constant uptrend, 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 uptrend. You understand? So this is not something you would want to try and short until you have confirmation. So you want to see something like this before you look to short. So right now, as long as it's bullish, you'll be looking for longs or you'll be looking to buy and play it to the next high. You understand? That's how you would want to play it for now until we get bearish confirmation. So guys, that's my little take on timeframes. Remember, always trade or invest with the trend. You don't want to counter trend. You don't want to counter trade the trend, because that's how a lot of people lose money, even with waves. Solana, for example, was a good one. When Solana was at $50, I think that's when people started buying in. $40, $50, went to $80, people looking to short, went to $100, people looking to short, went to $150, people thought this is too expensive, so I need to short it. Then all of a sudden, Solana's at 200 plus. I think it even touched 250. So remember, the trend is your friend. Don't trade against it. Because you can see Solana went from 50 to 200 plus. And there's a thing where even if price is high, it doesn't mean price is too expensive as long as there are buyer interest. Buyers will be interested as long as the trend is intact. So this is what's important to note as well. Just because price is high doesn't mean, or let me put it this way, just because price seems high doesn't mean it is actually high. Because with waves, for example, as I mentioned, people thought it was too expensive at $30. But look, it went all the way to $60, because as long as the trend is still intact, people will still be looking to buy. So even if you bought at $30 and not $9, you still could have doubled your money. You understand? That's how the markets work. As I said, you don't need to catch the best prices. You don't need to catch the tops and the bottoms. Like, no one can catch the tops and the bottoms. You just wait for confirmation. And once you got the confirmation, then you look to place your orders. So that's my quick briefing on timeframes. If you enjoyed this video, if you could please smash that like button, subscribe to the channel, and hit that notification bell for the latest buying opportunities. I will have a coin update soon. And for those that watch my AVAX video, it is doing very well. It just smashed past $100. So that one there is playing out well. So tune in tonight to see what coin I will cover next. So guys, thank you for all the support, and I'll catch you all in the next video.